Alright, welcome back to another video on the After Hours channel. In this video, we're going to be taking a look at the top 3 best dividend paying stocks. I'll be discussing why I think they're in my top 3. We'll be breaking down some of the financials of the company, and I'll also be using some specific criteria in order to identify these companies and choose the best one. The criteria I'm going to be using for these dividend paying companies, we're going to be starting at number 1, and that is the dividend yield. That is how much they are paying out in their dividend. Is it high? Is it low? We'll find out. Second on that list, and one of the most important things to look at, is reliability. Can that company continuously pay that dividend out over time and in the future? Or do they run the risk of cutting it unexpectedly? Third on that list, and most importantly in my opinion, stock performance. We're going to be taking a look at how these companies have performed over the last few years in comparison to SPY. Because let's be honest, there's no point of buying a dividend company just to receive that dividend if your holding is underperforming the market. And lastly, we are going to be taking a look to see if these companies have continuously increased their dividend over the years. If that sounds like something you're interested in, then stick around. But of course, before we get into that, let's do a quick portfolio update. We are in a series right now called Road to 1 Million, where I track this dividend portfolio that you see on your screen right here all the way to $1 million. Year to date, this portfolio is up $30,000 or 48%. If we take a look at my all-time performance, it is up 53% or $32,000. And as a little bonus, you can see right here, I got $187 of cash in my account right now, which is a dividend I received from none other than SCHD, which is right here. So to kick this video off, I actually want to start with highlighting what a dividend king is. A lot of new investors, when they're looking at dividend stocks, the first thing that they're going to find when they start doing some research is the coveted dividend king. What is that, you may be wondering? Well, essentially, it is an exclusive group of stocks that have increased their dividends for at least 50 consecutive years. So not a small feat by any means. Why am I highlighting this, you may be wondering? Well, I'll show you right now. This is a list of 50 dividend kings. You can see them all right here. You can see how much the yield is, how long they've paid that dividend, and how much their market cap is. But if you were an uninformed investor and you didn't know what to look for, you may buy into a company like Colgate. Let's take a look at what I usually see with dividend king companies. So as you can see, this is a dividend king. It's a very known company. It's very known for paying out its dividends every single year. And to the uninformed investor, if they were to look at this, they would see it's trading at $78 per share, and it currently has a dividend yield of 2.47, which isn't bad. One thing investors tend to overlook, though, is the payout ratio, which is nearly 100%. Now, if you're unfamiliar with what a payout ratio is how much of the company pays out in a percentage from their net income, which is right here. So if we look back in 2022, Colgate had a net income of $1.79 billion. Based on that payout ratio, 99% of that income went towards paying their dividend. That is not a good sign. In addition to that, when you're looking at dividend kings, they typically have not increased their dividend a lot over the last 10 years. In the last 10 years, Colgate has only increased their dividend by 3.51%, which is low in my opinion. Yes, the graph looks very nice, and it looks like it's continuously going up over time, which it is. But the reason that many of these companies can pay their dividend for 50 years, 60 years, and more is because they only raise their dividend a few cents. Taking a look at another example from the Dividend Kings list, and we'll cover this real quick, is none other than AbbVie. Free cash flow looks really good in my opinion. This company is definitely earning money. But when we take a look at the dividend yield and the payout ratio, it paints a different story. Yes, this company pays a high dividend yield at 4.15%, but their payout ratio is over 100%. Now, if these numbers are right, that means that their net income for 2022 is actually in the negative. Yes, it says they made over $11 billion, but they're paying all of that out and more towards their dividend. In my opinion, that is not a company I want to put my money into because I look at that as a form of mismanagement. Don't worry, we're going to be looking at 3 other companies that blow these dividend kings out of the water, in my opinion. Coming in at number 1, and that is none other than Microsoft. Now, I know what you may be thinking immediately. It's an expensive company right now, and the dividend yield is pretty low, but there's a reason that this is in my top 3 list. Taking a look at the dividend section, it currently pays a 0.8 2.80% dividend yield, and the payout ratio is only 27. That means only 27% of their net income goes towards their dividend, which means they could raise that dividend substantially if they wanted to. In addition to that, if we look at how much they've increased their dividend over the last year, it's up over 10%, and in the last 10 years, they average a percentage of over 10% as well. That is really good. Now, granted, most investors would look at this and they're only paying 75 cents per share. Once you start building a substantial position in this holding, those dividends are going to start rolling in. And as you can see right here, it's going to be going up nearly 10% a year or less, which is going to further snowball your portfolio. If we go back to our checklist right here, so we've already looked at the dividend yield, which is relatively low in my opinion. I do agree with that. We've looked at the dividend increase over time, which is really good in my opinion. So now let's take a look at these two right here, the reliability and the stock performance. Based on this chart and the amount of cash that this company has on hand, I would say that this dividend is extremely reliable and the company is reliable. I see no dividend cuts here, and with a payout ratio as low as 27%, I don't foresee this company cutting their dividend in the near future. Now for the stock performance, we're going to be basing that off of SPY. As you can see in the last 5 years, SPY is up nearly 75%. If we take a look at Microsoft's performance over the last 5 years, it blows it out of the water, up nearly 240%. So not only are you getting an increased dividend multiple times a year, but you can typically rely on this company performing very well over the years. There's a reason that it is my #1 holding in my dividend portfolio. Coming in at number 2 on my list, and that is none other than Costco. Again, a pretty expensive stock as of right now if you're just basing it off of how much it is per share. But when we're talking about dividend companies, this is an absolute powerhouse. And let me show you why. Taking a look at the dividend section right here, we can see that their yield is currently 0.65, which is on the lower end, just like Microsoft. So it typically doesn't get dividend investors that excited. As for the payout ratio, it is also 27%, which is just the same as Microsoft. So very low. This company could easily raise that dividend whenever it wanted to. As far as reliability, let's take a look at the balance section real quick. If we look down at the bottom where it says net, this company currently has just under $10 billion of cash on hand. So that's going to play into how reliable this company is at paying their dividend. In addition to the cash, we can see that this dividend is very reliable with huge spikes and a gradual increase over the years. Now you may be wondering, what are these huge spikes like in 2020 where the dividend was $10 per share? Well, Costco is known for paying out what's called a special dividend. The best way to describe that is them showing appreciation for their shareholders and using some of that cash they have on hand just to pay an extremely large dividend. If we take a look down here at the bottom, we can see that in the last year, they've increased their dividend by over 13%, which is really good in my opinion. And in the last 10 years, they've had an average growth of over 12%, so even higher than Microsoft. But if that isn't enough to convince you that this is a great dividend stock and company to own, let's take a look at the performance over the last 5 years. Again, it has blown SPY out of the water, being up over 176%. Again, not only are you getting the benefit of an increased dividend and potentially a special dividend, but your capital gains are likely to go up as well. Before we get to the last company, just remember we do have 2 bonus companies I'm going to be including at the end, which pay a very large dividend. I think it's something you're going to want to check out. But without further ado, let's take a look at the last company that I have in my top 3 of best dividend stocks to own, and that is none other than Visa. This is an amazing company. It's extremely well ran, and when we take a look at the financials, you'll see that it is an excellent dividend payer. As for their current cash on hand, they're actually in debt, $33 million, which is nothing for this company. They could pay that off whenever they want to, so we can use that for its reliability factor. And if we take a look at the dividend, the current yield is 0.81, so a bit higher than Costco, and their current payout ratio is only 22%, which is lower than both companies we just looked at. When we take a look at the dividend, you can see that this company is extremely healthy, increasing their dividend multiple times a year. Taking a look down here at the bottom, we can see that in the last year alone, Visa has increased its dividend by over 15%. That is massive. And in the last 10 years, they've increased it by nearly 18%. Now, it is very rare to find a company that's extremely well ran, has a ton of cash on hand, is profitable, has high returns on capital employed, and doesn't dilute its shareholders, and continuously pays an increased dividend. Folks, that is what we're looking at right here. Visa is an amazing paying dividend company, and I highly suggest you do your own research to potentially add this to your portfolio in the future. But of course, we have to see how this company has performed over the last 5 years. As for the performance, this company is up 88% in the last 5 years, so still beating SPY. Now, I wish it was as high as Costco and Microsoft, but there is a give and take, and you can't always have everything you want. Nevertheless, I think this is an amazing dividend paying company. That's why I included it in my top 3. Now, as promised, let's look at those bonus companies I was referring to. The first bonus dividend paying company is VG. This company makes up around 12% of my total portfolio, so it's a sizable holding, and they pay a huge dividend. Now, with this company, I do want to point out that it is a very levered business. They are currently in debt $16 billion, and without going into the fine details of this company, I suggest you do your research. They own a lot of land and casinos on the Las Vegas Strip. As for the dividend section, it currently pays a 5.39% dividend, so much higher than the other companies we looked at. In addition to that, their payout ratio is only 16%, so very low. As for the performance over the last 5 years, it is currently underperforming SPY with being up only 50%, but I think it is important to mention that when we look at this company's free cash flow, it is very healthy. This company is clearly making money. As for the dividend, in the last year, they've increased it by 6.4%, and in the last 5 years, increased it by over 7%. So not as high as I would want it to be, but remember, this is still higher than most of the dividend kings out there. I looked through a large majority of that list of 50 companies, and either the company was barely profitable, treading water, or paying out all of their net income just to sustain that dividend and keep that title. The next bonus company, or I should say ETF, is none other than SCHD. I didn't want to mention ETF because I didn't want to give it away, but again, this is another extremely large holding in my portfolio, coming in at number 2 as far as weighting size. Now, because this is an ETF, we can't look at all the financials, so you'll see a lot of metrics are blank right now, but we can look at the dividend and the performance over the last 5 years. As far as performance over the last 5 years, this company is up nearly 50%, so just under SPY. And when we take a look at their dividend, we can see that in the last 5 years, they've increased it by over 5%, and in the last 10 years, increased it by over 12%. And again, this is an ETF, which I believe holds 104 companies. So for the price of $80, you're diversifying your portfolio immediately. And if we look at the dividend yield of SCHD right now, in the last 30 days, it was 3.74. If we take a look at my history right here, you can see that they actually just paid me over $180 20 hours ago. Now, before I wrap this video up, I just want to point out that I could have picked out much higher yielding companies or ETFs. For instance, one holding that I used to have in my portfolio was JEPI. This is an actively managed fund that typically invests in large cap US stocks, and they pride themselves on being relatively low volatility, in addition to paying out an extremely high dividend yield of 8.66%, which continually changes throughout the months. Sometimes it goes higher, sometimes it goes a bit lower, but this company also pays a dividend every single month. To prove it, we can look at my history with this company, my buys, sells, and dividends coming in every single month from owning this company. If you're looking for fast cash and a dividend that pays out monthly, maybe this is something worth looking into. I hope you guys enjoyed the video, and I want to know what you think about my top 3 picks. Are these companies you would invest your money in, or are you looking for a higher yield? Don't forget, if you guys want to get exclusive content and you want to get notifications as soon as I buy or sell a company, consider taking a look at the Patreon. But with that being said, I hope you enjoyed, and I'll see you in the next one. Take care.